So to shift back from an investor or consumer side, you mentioned several times about the cost of production. We're talking about hash and things. Can you tie the concept of cost of production to what is actually costing somebody? Like let's use gold as an example. If I say a gold miner has a cost of production, well, in my head that's pretty easy, right? You're renting or you're buying an excavator. I'm going out to land that I either own or that I lease. I'm digging into the ground. I'm paying people to operate the machinery. If I have a machine that filters out dirt from gold, like I have to buy that or I have to lease that. And so that to me intuitively makes sense. Someone goes out into the field that they think that they know where gold is. They dig it out of the ground, and ultimately, at the end of the day, all of that sums up to, as you describe it, cost of production. In the Bitcoin world, I don't know that that's quite as intuitive. And so now linking in again, where we've talked about hash rate and things like that, and this concept of cost of production. Can you link those two together? Like, what is it when we say the cost of production of Bitcoin? What is actually money being spent on? What is being invested in terms of a cost that ultimately we're trying to equate to a fair value?
Absolutely. So land, labor, materials. These are always going to be your three main things, no matter what you're producing. And in Bitcoin, number one, you need to secure the land. So you can rent it or you can buy it. Labor, you need skilled workers. You need people who can repair the machines. You need people who can operate the mining operation itself. And then you need the materials. You need the actual ASICs that are going to do the hashing. You need all of the wiring. You need the racks. All of this comes together to form the all-in sustaining cost of a Bitcoin mining operation. And it changes throughout the world. That's one thing that's really hard. There is no way to say like, hey, it costs this much to produce a Bitcoin. Well, no, because each and every mining operation is going to have a different set of costs. And we break those costs down into capital expenditures and operational expenditures. And I think one of the biggest problems in the marketplace today actually is that miners love to talk about their electrical cost of production, right? So they have a solar mining farm set up on 500 acres of land. And hey, it only costs them $4,000 of electricity costs to mine one Bitcoin. Yes, that's great, but that's just one line item of your expenditures. You also have to buy the land, the materials, the labor. So to set up that entire operation, it might have cost $100 million in order to get to that point. So that's one of the reasons that I advocate for the mining industry and hopefully Michael Saylor and the Bitcoin Mining Council to start to require a reporting requirement for all-in sustaining cost, because investors and the miners can be confused when they come out and say, oh, it cost me $4,000 electrical cost to mine Bitcoin. And with Bitcoin today at the price at $60,000, you would say, wow, this company is going to be really, really successful. But when you take into account capital expenditures and the cost of acquiring the land and the labor, you could be upwards of $60, $70, $80,000. There are miners today who are mining Bitcoin at a loss. That's just the reality. And it's a cutthroat industry too. It's not always rainbows and butterflies. Bitcoin's always profitable. No, there have been very smart people who have failed in this industry. I had my own mining farm going into the 2016 halving, and that's where I learned a lot of this stuff. I didn't really understand the effects of that. Yeah, sure, okay, the block reward's cut in half. Who cares? Yeah, well, you're going to care when you have costs that you have to pay. So I learned a lot of this through my failures. And have been able to adapt. And that's what I think I really want the market to understand. This is a cutthroat industry, and the cost to produce Bitcoin is much higher than the reported electrical costs that we're seeing popularly from the publicly traded miners. And that what that means is the fair value of Bitcoin is higher than what it is today. So
go ahead, finish the thought.
The concept of Bitcoin is backed by nothing is actually not true, because it's backed by all of the costs that go into it, because that's what creates that fair value. And today you can buy Bitcoin at fair value, but what the market is missing is that over time, as hash rate continues to increase, especially as we move into this global hash war, that's going to push up that cost of production like it has since the first block. and we're going to continue to get higher and higher lows of fair value, which is the most exciting thing for any commodity in the world, because as we stated, this is the only commodity that has this engineered component.